2022-23. Today we have young and dynamic speaker, CA Hiren Pathak ji from Ahmedabad, who speak on the topic assessment and audit under GST. He will cover the topic from the perspective of the chartered accountants and department also. Now I welcome Hiren Pathak ji. Welcome, sir. And request CA Amish Sangoi ji, our past convener, for the brief introduction of CA Hiren Pathak ji.
Thank you, Jitendra ji and Utkarsh ji. I welcome CA Hiren Pathak sir to our Andheri Oshiwara CPE Study Circle, Mumbai. A brief profile of the sir, CA Hiren Pathak. CA Hiren Pathak is a fellow member of Institute of Chartered Accountants of India since 2011. He is partner in reputed CA firm Chandulal M. Shah and Company since 2012 and mainly practicing in the field of indirect taxation. He is a commerce graduate from HL College of Commerce and he is a DISHA qualified from ICAI. He was a member of Indirect Tax Committee of Ahmedabad branch of WIRC of ICAI for the year 2019-20 and 2020-21. He was also appointed as co-opted member of Indirect Tax Committee ICAI New Delhi during the year 2018-19. He has contributed many publications of education and research material by ICAI on various indirect tax topics like technical guide on annual return and audit under GST, background material of GST, e-publication on refund under GST, background material on GST for commerce student, etc. He has also contributed many articles published by IDTC. So with this short brief introduction, I welcome you, sir. Over to you, sir.
Thank you, sir. Thank you, Amish ji. At the outset, I thank you, Jitendra sir, Jitendra Kothari sir, as well as Utkarsh Sharma sir, to give me a chance to introduce some of my thoughts. And thank you, the Andheri Oshiwara CPE Study Circle. As you must be knowing, today's topic that has been covered is GST audit from the perspective of tax department. But as per the discussion with Jitendra sir, we must be knowing that GST audit by chartered accountants has been done away with, but still we need to review GST compliance of our clients. And since you all are chartered accountants, so you must be doing the GST review work of your clients. Ultimately, GSTR 9 and 9C, which is annual return and reconciliation statement, that is being filed by client on self-certified basis. But being a chartered accountant, it is also our responsibility to take care of the facts that whatever information that has been furnished by client to the government is accurate. So I would also cover how we, being a chartered accountant, can review GST compliance of our clients, and at the client place, what information that we can review so that we can identify certain upcoming litigation issues. So I'm sharing my screen.
Yes, it's visible, sir.
Visible, correct?
Yes, yes.
Okay. So basically, I will cover entire session and I will try to utilize these 2 hours to give justice to these 4 points, or rather 4 topics. First, as I said, which is the topic for the day, that is the legal provision of assessment under GST. Second, we will try to cover how the department will cover the audit, that is the legal provision of audit under GST by tax authority. Third, which I took it for the first time, and it must be something new for all of us, that is walkthrough of CBIC audit manual. CBIC has already issued audit manual for the tax officers, that how tax officers will cover GST audit when he conducts GST audit of taxpayers. And lastly, as I said, some of the checklist for you to review and implement at your client place. So I will divide this entire presentation into these 4 parts, and we will try to give importance to each the point wherever I think that must be, you should consider while doing your professional assignment. So to start with, we will start the first topic is assessment under GST. So first question that will create in our mind when we heard the provision of GST assessment. So what is the assessment? We all know that assessment is a determination of tax liability, and that includes the self-assessment, reassessment, provisional assessment, summary assessment, and base judgment assessment. Up till today, whatever we have done in GST for our clients is one way. Why I am saying so? Because till today we are thinking that particular exemption is available to our client. So we give the advice accordingly, and client has complied for his GST compliance accordingly. It may be a case where we have identified certain classification of a product as XYZ HSN and consider GST rate as 5% or 12%. So it is purely on a self-assessment basis. Now it's time for department to assess our books of account and annual return and reconciliation statement and give his views. So there may be a conflict. So then it would be a two-way. The department will also intimate their stand. We have already taken our stand, and it's time for a litigation, because till today the department is engaged in concluding earlier period, earlier regime tax dues, that is under state jurisdiction VAT and under central jurisdiction central excise and service tax. Now at least in Ahmedabad, now the authorities are coming out for GST assessment by way of a GST audit, and they are issuing the notice, and we are complying with the GST assessment or GST audit by tax authority. So what are the provisions? That is, first of all, we will understand what are the legal provision of GST as far as the assessment is concerned. Section 59, as I said, it is self-assessment. You do assessment your way and discharge the tax liability according to what best suits to you. In case you are confused regarding some of the information that you may not be capable to identify value or rate as the case may be, then there is a similar provision just like earlier law for the provisional assessment. Then after, since we are regularly complying by various GST returns, they will scrutinize our GST return and do the assessment accordingly. That is covered under section 61. Section 62 says that what if our clients have not filed GST return? Self-assessment can be undertaken when we are filing GST return. We are filing GST return on ourselves, and department is verifying that return and assess our tax liability. But what about the cases where returns is not at all filed by a client or the taxpayer? So for that, there is a separate provision for section 62, which is for the non-filers of the GST return. But please note that, again, non-filers are registered persons. What about the unregistered person who are not supposed to file GST return? Then it may be a case where unregistered persons, which obviously will not file his GST return, but he is supposed to file or supposed to obtain GST registration. Assessment thereof is covered under section 63. And there are certain summary assessment where department thinks to cover the revenue loss, they might conduct certain special assessment. These all are section 59 to section 64 are part of the assessment provision. Then after it conducts GST audit under section 65 and 66, 65 is GST audit by the tax authorities, and 66 is a special audit. We will see each provision and hidden aspect under the each provision in upcoming slide. First of all, self-assessment. You must be knowing that we are regularly filing GST return, but one on another way, department is issuing the notices by way of auto-populated notices through GSTN or by way of a data digging. But first step in under every act, maybe a GST Act or Income Tax Act. First of all, this self-assessment is the underlying principle which and government is entrusting the taxpayer and give the freedom of the taxpayer to furnish the return and identification of the tax liability according to their own way. Section 75(12) talks about one particular provision. First of all, let me clarify. Under GST, whenever there is a adjudication is going on, one is self-assessment tax, one is self-assessment in that the tax is determined, and there may be a two scenario. If the self-assessment tax has not been paid by the taxpayer, then there is a direct recovery provision is available in the GST law. Unlike other provision, where when you have not self-assessed your tax liability, but department is imposing certain notices, department is conducting the search, and accordingly your tax liability has been identified. In that case, adjudication process is must. I'm giving one example. If you are declaring certain liabilities in GSTR 1, but not paid in GSTR 3B, then as per the amended law, that is a self-assessed liability. You must have to pay that liability, and direct recovery provision is available. That is covered under 17(5)(2). That is obviously notwithstanding 73 and 74. We must be knowing that 73 and 74 is for the normal case when demand is to be raised, adjudication process is going on as per 73, whereas in case of a fraud, the same is covered under 74. Explanation already says that self-assessed tax includes tax payable in respect of the details of the outward supply under section 37, but not included under 39, which is GSTR 3. So please note, whenever you are filing your GST returns, make sure that whatever liability you have furnished in GSTR 1 must be reported under GSTR 3B. Otherwise, there is no need to go to approach the department to issue a so-called notice, giving the opportunity of being heard. It is not required because it is already, as per you only, it is a self-assessment tax. Department can impose a direct recovery provision. But what is not called self-assessment tax? First, non-admitted tax. That is, you have not admitted, means you have not furnished in the returns that this is my tax liability. So that is not covered. Now question may arise that one would say that I have reported X amount in GSTR 1, but amount reported in GSTR 3B is little less because I have by mistake reported higher amount in GSTR 1. Then what to do? Whether that excess amount will be called self-assessed tax and recovery for the same is possible as per section 17(5)(12). Instruction is already issued with respect to these issues, and it says that whenever a taxpayer is rectifying the errors in subsequent return, it may be a case where GSTR 1 liability is reported higher, but taxpayer comes to know after a certain period of time that this liability is reported in excess, then he has a time to rectify the error in subsequent returns. So it is not called self-assessment tax. Further, interest, if taxpayer has a legal basis to justify that interest is not payable, then interest is not called self-assessed. for recovery of the interest and penalty, they have to adjudicate the matter by giving the so-cause notice. So till now, we have covered self-assessment tax, which is the tax which you have reported in GST returns, and recovery provision is there without issuing any so-cause notice and adjudicating the matter. Further, whenever there is a recovery, burden of proofs whether that demand is sustained is on whose shoulder this burden of proof lies. It says that whenever department is issuing a so-cause notice by saying that Mr. X, you need to pay 100 rupees by way of a demand, then department has to prove that this amount, under which provision this amount is derived and under what section this liability is created. However, when there is an exemption is claimed by the taxpayer, then onus lies on the taxpayer to prove that this exemption is applicable to taxpayer by what means. Similarly, under section 155, whenever ITC is claimed by taxpayer, and we must be knowing that many of the issues will rolling around the ITC only. So in case of ITC, it is obviously on the taxpayer, because taxpayer is claiming the ITC. Whenever the department says that it is not eligible ITC, then owner's burden of proofs lies with the taxpayer to say that why this is eligible. As I said, we have a similar provision under section 60 for provisional assessment. When the taxpayer approach a proper officer for provisional assessment, it says that whenever the taxpayer is unable to identify the value or the rate of the tax, then it's intimate the proper officer in writing that, look, Mr. I am not able to identify the value. I'm not able to identify the rate. So what is my proper liability? You please assess my books of account. You verify my books of account and let me know how much amount I need to pay. But as per my calculation, let's say I value this item as 100 and I consider GST rate as 12. I am paying this 12 rupees. Then proper officer is responsible to issue an order within 90 days to allow him this 12 rupees liability provision. But with the condition, if after assessment, if that 12 rupees is increased to 18 rupees, then you need to pay the differential amount of 6 rupees by way of interest. Similarly, if that liability is reduced after assessment, which may not be the case generally, but in case the tax paid provisionally by the taxpayer is higher, then taxpayer is obviously eligible for the refund. And that refund amount, timeline will be counted, because we must be knowing that refund will be applied within 2 years of a specified date. In this kind of case, the specified date will be the final assessment order. And if the final assessment order is passed by the authority, that order must be appealed. That order is appealable. Generally, this kind of provision is rarely applied by the taxpayer. Taxpayers are opting the advance ruling, which is far more wide, because that scope is much wider. But difference between provisional assessment and advance ruling is that it covers many other questions. Advance ruling covers many other questions, but however, the provisional assessment consider only value and rate. Now comes section 61. I am registered under GST. I am filing regularly. I am filing my GST returns regularly. Now, it takes the time for the department to come for a GST audit or assessment of my books of account will be carried out by the tax authority much later. But to assure that there is no revenue leakage, there is a scrutiny of the GST return is also conducted by tax officer with the help of GSTN, which is accumulating the huge data. Based on my GST returns files, my scrutiny of my returns is conducted, and verification has been made whether I have filed my GST returns correctly or not. And if any discrepancies find out, then we are seeing nowadays that we are receiving the notice in ASMT 10. That ASMT 10 generally is for difference between GSTR 3B and GSTR 1. Difference between ITC claim in GST returns as against the ITC that is available in GSTR 2A. Similarly, whenever you are claiming any exemptions, ASMT 10 has been issued to assure whether proportionate liability as identified and as mentioned in Rule 42 and 43 has been reversed by you or not. In case there is one instruction number 2/2022, recently the scrutiny of the return instruction has been issued by CBIC. What are the instructions that has been passed on to the tax authority, and what are the areas that they will see? I have reported. First, as I said, tax liability that is reported in GSTR 3B and GSTR 1. Similarly, we are paying RCM tax under RCM provision, but there are certain ITC which are blocked. I'm giving one example. We need to pay tax on RCM basis in case of a rent-a-cap. However, ITC for the same is blocked. So my liability of RCM is higher than ITC that I'm claiming by way of RCM. So they are comparing the liability of RCM and RCM ITC that you have claimed. Similarly, whatever ITC I am claiming, being a taxpayer, that may be by way of all other ITC or import ITC or ITC by way of an input service distributor, whether the same is reflected in GSTR 2A or not, that is the much obvious notices that we are receiving nowadays. Similarly, they have also instructed whether outward supply that is reported by a taxpayer and what are the taxable value of the TDS, TCS credit that is claiming under section 51 and 52. Because it may be a case that he is issuing the invoice of 100. Other person is responsible to deduct the TDS. So he is also deducting the TDS on 100, TDS under GST, I am saying. So scrutiny of the return also covers this kind of para, where there is a comparison of between these values. We are raising the invoice. Together with that, whenever applicable, we are also supposed to issue e-invoice. And for the movement of the goods, we are also need to generate e-way bill. Whenever we are raising the e-way bill, that data is also being captured, and GST data is also maintained by GSTN. These two data are also being captured to issue a notice whether you have removed the goods but not raised the invoice and not reported in GSTR 1. That is also covered under GST return scrutiny. You must have claimed the ITC from the suppliers whose registration has been cancelled. Now, claiming of the ITC, you must be knowing that I presume that you all have the basic background of GST, so I'm not going into that much depth as far as the certain legal provisions are concerned. Whenever I foresee that certain provisions needs explanation, I will try to provide at the time of that discussion only. Section 16.2 says that there are 4 conditions based on which I can claim input tax credit. One is I should have the tax invoice, goods and services must be received, tax must be paid by the supplier, and I have claimed that credit in my return. This is the very basic condition as mentioned in section 16 to claim any input tax credit. Now, when the registration of that supplier is at all cancelled, how can he pay tax? And when he cannot pay tax, the eligibility of that ITC is questioned on him. So this return scrutiny is also covered one point where registration of the suppliers is cancelled, then that para is also to be scrutinized. Similarly, tax authority on their portal, they can very well see the list of the suppliers or list of the registered person who are not filing the GST returns. And if you have claimed the ITC from such kind of supplier, then that is also under scrutiny. Similarly, ITC under 16.4, which is obvious, which we have discussed. If you have reported any exempt supply, then tax authorities are considering whether you have reversed the ITC under 42 and 43 or not. And if there is any interest liability, then when you have paid the GST returns late, whether you have paid the interest also, that is also to be scrutinized in GST return scrutiny. So this instruction issued by CPIC covers all this para. We have to follow the approach where we are forcing right now what are the issues that department is seeing, the department is verifying at the time of their assessment. So we being a chartered accountant also have to scrutinize the data of our clients at the time of GST review, whether these all points are complied by the client or not. So whether I am discussing the provision from the perspective of tax department, the same can be the analogy will be the same, and you can very well take the concept and verify whether you being a GST consultant and you being a advisor to a company, whether company has followed that provision or not. Assessment of the non-filers, the person who fails to furnish the returns, then proper officer may issue a notice to them why they have not filed the returns. We must be also knowing that whenever there is a delay in filing GST returns, then auto-populated notices from GSTN is also being issued, whether why you have not filed the returns. And if they have filed the returns, then no further proceeding will be carried out. But if they have continued to not file the returns, then the proper officer can conduct the base judgment assessment and adjudicate the matter accordingly. We are receiving the notice for non-filers of the GST return in ASMT 13. Similarly, in case of an unregistered person, but proper officer feels that such persons should obtain GST registration because their turnover may be crossing the threshold limit, or whose registration has been cancelled, so he is considered to be unregistered person. But still, department feels that he is liable to pay the tax. Then similarly, matter has been adjudicated by the department under section 73. Notice has been issued to such kind of person in ASMT 14 and 15. Summary assessment. What is the summary assessment? This is also the similar provision which was there in erstwhile law. It says that when any evidence shows that liability of a person coming to the notice of a proper officer, he has to take the previous permission of assist additional commissioner or joint commissioner and proceed to assess the tax liability. Assess the tax liability of that person, and underlying principle behind that is the interest of the revenue. Such proper officer is conducting the assessment. It may not be a non-file. He must be regularly filing the GST return. It is not like that he is not filing GST return. But whenever the department feels that there is a unnatural movement, or there is a trend analysis, looking to the trend analysis, when some person is paying the taxes in crores and suddenly that person is not paying the tax and claiming the input tax credit. Such kind of situation warrants the summary assessment by the department under section 64. So these all are the provision of GST assessment. Now we will see what are the provision of the GST audit by the tax authority. First of all, before going to the GST audit, we will see what is the meaning of GST audit. Section 213 defines audit as examination of what? Records, returns, or any other document maintained or furnished by the registered person under this act or these rules or any other law for the time being in force. So first of all, audit defines that examination of the records and returns. It further says that after examining, they need to verify the correctness of turnover declared, tax paid, refund claim, and ITC aware. And last provision is very important. It says that and to access the compliance with the provision of the acts and rules. So last slide is very sufficient and very wide to cover anything into audit. You cannot say GST authority that, look, Mr. I have transferred certain goods for a job worker for job work. So it is not covered under your parameters and it is not covered under the GST audit definition. It says that any other document that you maintain and whether you have complied the GST Act and rules. So compliance means everything and anything that can be covered. So the scope of the word audit is very broadly defined. So what are the various types of the audits? We initially discussed earlier GSTR 9C, that is called reconciliation statement needs to be certified by chartered accountant. So that was called audit by chartered accountant, but that is no longer effective as of now. So we are not discussing that provision, but at the end, as I said, our fourth part of the topic, which is how we being a GST consultant can give the value addition to our client. Now we will see and cover the para in that part. So presently there are two types of audit. One is audit by the tax authority, and similarly second is the case with the special audit. We will see the legal provision of these two. Section 65 says that the tax authority has the power to conduct an audit. It says that the commissioner or any other officer authorized by him. So ultimately the GST audit is conducted by the commissioner, or he may give the order to below the rank of the commissioner, any officer, to conduct a GST audit of whom any registered person for such period and such frequency as may be specified. We will see what are the such person, what are the period, and what is the frequency in a subsequent slide. Next question arises, where they will conduct this GST audit. So it says that GST audit may be conducted at the premises of the registered person, or they conduct the GST audit at their own office as well. But before starting any GST audit, they need to issue a notice not less than 15 days to a registered taxable person that, look, Mr. We have selected your case for GST audit, and we are giving the intimation to you that after 15 days, we are starting the GST audit at your place. Next question is when the audit will be concluded, because many of we must be knowing that this was the major headache in earlier regime as well. The department is starting the GST audit, but the completion date is nowhere defined. I mean, even though it is defined, it is continuously going on and on and on. So there must be a reasonable time limit to completion of that GST audit. So as per 65(4), it says that the audit must be completed within the period of 3 months from the date of commencement of the audit. Now, what is called the date of the commencement of audit? That we will see in subsequent slide. But here, as per the provision, it says that when the audit is initiated within the period of 3 months, that will be completed. 3-month completion in the sense, final order must be issued, audit report must be issued to a registered person within the period of the 3 months. However, it may possible that 3 months may not be capable, or that 3 months is not enough for the tax authority to conclude the GST audit of the taxpayer. So with the commissioner's permission, they may extend this period to further 6 months as well. Here we have discussed that within 3 months, they need to complete the GST audit. So from the commencement of the audit, 3 months from the commencement of the audit. So what is called the commencement of the audit? As per legal provision, it says that the date on which the records and other documents called for by the tax authority are made available to the by registered person, or actual institution of the audit at the place of the business, whichever is later. Now you see the practical scenario here. It says that whenever all the documents that was asked by tax authorities from the registered person, that is made available to them, or whenever they are starting the GST audit at the actual premises of the client, whichever is later. So it may possible that they are continuing the GST audit at the premises since many months. Let's say they are conducting, they are frequently coming. I mean, in a stretch they are coming. Let's say whenever they are coming for the first time, they took 4 or 5 days to initially gather the data. Then after reviewing the data, they again come for the premises to verify the other documents. They ask the explanation and justification for some of the audit para. Similarly, this process is going on and on. Here problem is commencement of the audit means the document that are made available by you to them. So it may possible that on the last moment they ask certain details. So legally you cannot challenge them, and you need to provide the documents to them, and you cannot say, Mr. 3 months of yours is over, so you need to complete the GST audit. So practically speaking, as far as the completion of GST audit provision are concerned, we are not supposed to have interfere in that, but to cooperate with the tax authorities and provide the document that they are asked for. Other provision of this audit by tax authority says that you need to provide the facility to verify the books of account whenever they are coming to your premises. You need to provide the documents required by them. They can ask anything, provided they, as far as these documents are relevant for verification of GST liability or refund or ITC, you are supposed to provide such kind of document. You have to access them for your business premise, because that is mentioned under the provision that they can come to your premises and verify the documents. After conclusion, within 30 days, they are informing the findings and provide you the rights and obligation of yours. In simple sense, they are providing you the audit para. If you agree with them, then they will intimate you the procedure to conclude GST audit, because you may not be aware that what is the next step after they are issuing the audit para. So they inform that what is the legal remedy that is available with you, or in case you want to pay the tax liability, how can you discharge. Whenever they are raising any audit para, they give the reason why they have issued this para and under which provision they are issuing or raising the tax liability. It may possible that certain audit para is coupled with the tax liability that you may not be agreed to pay. Then proceeding under section 73 and 74 that we discussed earlier will be started. question arises that what is the period of audit? In Ahmedabad, generally they are doing the audit of 1718, 1819 and 1920. It also says that the period of audit can be the financial year or part thereof or multiple thereof. They can cover any period. To start GST audit, they need to issue ADT 01 and finding it ADT 02. But please mark my word, you need to cooperate with the authorities. Otherwise, there is a serious repercussion. Because it says that if you are not complying with the, provision as mentioned therein, that you are not giving the data required by them, or you are not cooperating with them, then they transfer your case to the executive commissionerate, which is the higher body above the range commissionerate, that is those who are conducting the audit. They initiate the recovery proceeding from them, and they may transfer your case to DGGI as well. So that is where the concern arises. Then it may possible that they will again do the audit, which may be very in depth, and that is also, you take the lot of time, and unnecessary litigation would arise in that case. It also says that there is similar provision in GST law for GST compliance rating, which is yet not effective. But GST compliance rating would be given to each taxpayer based on the compliance that is incurring. Based on that compliance, your supplier would be able to know that what is how you are complying with the GST law. Your customer would be able to know your compliance rating, and similarly that compliance rating is used by tax authority for adjudicating your matter. If you are not replying to ADT 01 or not providing the details that is asked for, then your rating may be downgraded. This is all for GST audit by the tax authorities. Now, similar provision is there for section 66, which says that special audit. It says that whenever at any stage of scrutiny, inquiry, investigation, or any other proceeding that is against the taxpayer, any officer not below the rank of the assistant commissioner, having regard to the nature and complexity of the case, and for the protection of the interest of the revenue, it feels that the value has not been collected, declared, and credit away is not in the normal limit, then he may, with the prior approval of the commissioner, direct such registered person to get his books of account audited under this special audit. And this special audit is being conducted by the chartered accountant, who is nominated by the commissioner. It may be a case that where tax authorities may not have adequate access, or they feel that such kind of audit requires a special knowledge and special expertise of chartered accountant or post accountant. Then such kind of taxpayers are adjudicated under special audit under section 66. Chartered accountants appointed for conducting the special audit is appointed by commissioner, and expense as well as the remuneration thereof is decided by the commissioner. Whenever there is a detection of the liability, in chartered accountant need to furnish his report for this special audit to commissioner, and based on this report, if there is a detection of the tax liability with respect to the tax that is underpaid, or ITC that is wrongly claimed, or refund which is wrongly claimed, then they initiate the proceeding under section 73 and 74. As we are discussing section 73 and 74, I thought that we must be covered these provision as well. This is the legal provision for demand and recovery. Section 73, it says that when any tax has not been paid or short paid, or erroneously refunded, or input tax credit wrongly availed, but under section 73, the proper the weightage would be on other than by reason of fraud, willful misstatement, or suppression of the facts. For what? For evading the tax. So under section 73, there is not any reason of fraud or willful misstatement or suppression of the fact, then so-cause notice will be issued to such person and matters will be adjudicated under section 73. Penalty provision is also there. I have compiled one subsequent slide that what is the penalty that you need to pay if you have received the so-cause notice under 73, and if you receive notice under 74. 74 is for the reason of fraud, willful misstatement, and suppression of the fact. These words are very wide. It may be a fraud from the viewpoint of the taxpayer, but may not be the fraud as per you. So this is very subjective. These fraud, willful misstatement, and suppression of facts, these words are very subjective. Whenever department is issuing the notice, they need to prove that why, as per tax authority, short payment of tax or any addition of the tax liability is by reason of fraud or willful misstatement or suppression of the fact. Question may arise, what is called the suppression of the fact? Whether let's presume that some amount that I need to report in my GST returns, but I have not reported the same. Can someone say that this is a suppression of the facts? Because suppression of the facts, the definition of the suppression of the facts is given in GST law. It says that with information that is asked for but not provided. So let's presume that something GST returns ask taxpayer to incorporate certain details while filing GST returns, but taxpayer is not providing that details. Can officer says that this is a suppression of the facts because the information that is sought from you but has not been provided by you? In my view, yes, that may be a suppression of the fact, but just because of the suppression of the fact is not enough. Section 74 can be invoked only when this suppression would be for evading of a tax. It may be a possible situation where I have not reported certain exempt supply in GST return, but I have correctly reversed the ITC as far as the ITC returns, that is called GSTR 3B. While filing GSTR 3B, I have correctly reversed the ITC as per section 42 and 43. But exempt supplies I may not reported in GSTR 1 and GSTR 3B. So it is not my intention to evade the tax. We have the earlier erstwhile law judgment as well, which is categorically saying that just because the tax officer has identified something while conducting the GST audit, it does not mean that taxpayer has suppressed that information. Tax authority need to prove that that suppression result into evasion of the tax, and that too not with the bona fide mistake of the taxpayer. Then only section 74 can be invoked. As far as the payment of the dues for section 73 and 74 are concerned, I have tabulated the information, the quantum of the amount that taxpayer need to pay when the SCN is issued. If the taxpayer is paying voluntarily, let's say there is a one ASMT 10 notices has been issued, that is a notice under scrutiny of the return, that there is a difference between GSTR 3B and GSTR 2A to some extent. Now, before the SOCOS has been issued, the taxpayer voluntarily agrees to pay. Then when the SCN is issued under section 73, then taxpayer need to pay tax along with the interest. However, if the notice is issued under 74, then you need to pay tax, interest along with 15% of the penalty. However, in case when the SCN is issued and payment is made within 30 days of that SCN, still under section 73, interest penalty is not imposed. However, in case of section 74, 25% penalty will be imposed. But in case if you are paying the liability after 30 days, but within the period mentioned in the SCN, then penalty at the rate of 10% or 10,000, whichever is higher, you need to pay if your SCN is in section 73, as against 74, which says that you need to pay 50% of penalty. And what is the time limit for issuing the SCN? We are seeing that there are many extensions are granted as far as the annual returns are concerned. Due date of filing annual returns are concerned. And you must be knowing that due date of filing annual return is extended. So time limit to issue a SOCOS notice is also being issued, extended. Basically, under section 73, that is without fraud, SCN can be issued at least 3 months prior to the time limit specified under 7310. What is 7310 says that? 7310 says that the proper officer shall issue order within 3 years from the due date of the furnishing annual return. So ultimately, your adjudication order must be issued within 3 years from the due date of the filing annual return, and that the date of the before 3 months of that order, SCN must be issued. Similarly, in case of section 74, SCN must be issued at least before 6 months of that order, and order can be issued from the 5 years from the due date of filing annual return. For simplification, I have mentioned as far as this is with reference to year 2017-18. Annual return for filing 2017-18, the due date of filing annual return was 31st January 2020 or 7th February 2020, as the case may be, depending on the state. So if your adjudication is going on for 2017-18, then your SCN as under section 73 can be issued maximum up to 31st October 2022, and order against that SCN should be issued before 31st January 2023. So we have so for as far as section 2017-18 is concerned, still there are 4 to 5 months are left. If the order is not passed, or if the SCN is not issued before this time limit, then the proceeding for that year shall be deemed to have been concluded. So what you can do during the course of the audit, whenever the department approach you and issue ADT 1 for conducting the GST audit, what recourse that you have? First of all, you see the ADT 01, what are the information that has been asked for by the department. You provide each and every details that is required. They are giving the sufficient time to provide that details. And in case you want some extra time, you may furnish them in writing and requesting for the extension of the time to provide that data. It may be possible that certain details asked by them, it is not applicable in your case. Like cost audit report is asked for, but it may not be applicable in your case. So you need to categorically mention that this particular requirement is not applicable and should not keep the blank. Otherwise, it would be tantamount that they have asked for certain details, but you have not replied that why you have not furnished that details. Whenever you are providing that submission, have the copy of the same with you for further proof that in case they are asking the same detail again, you can very well substantiate that these details has already been provided to you earlier. Whenever after that conducting the audit, they issue a audit para that so and so liability has been raised on you because you have not paid the RCM, you have availed the block credit and so and so. You go through each and every para. Whenever you are agreeing to certain audit para, you need to pay DRC 03 against that audit liability and intimate them that these audit paras has been agreed by us and we are paying voluntarily against these audit para. And you need to give them a letter in writing. That is also, format is also attached in subsequent slide. But in case you are not agreeing to that, mention the reason for the same. They will, it's now they have the right, or they have the authority to issue a show cause notice for the paras that you have not agreed. And for that particular para, your matter will be adjudicated. So that is all for as far as the GST audit is concerned. Now we will see what actually the department will do, and what, because they will follow the guideline as provided by CBIC. Many states have also come out with their own audit manual, but the base will be of CBIC audit manual only. So what is the, as per this manual, they have defined the objective, why this audit is there. First of all, it says that to measure the level of the compliance of the taxpayer, and this audit has a preventive and deterrent effect. What is that preventive and deterrent effect? Then whenever taxpayer feels that he is about to get his accounts audited by tax authority, it is a deterrent effect when he will stop the taxpayers from continuing under any default. If he is declaring tax liability less, or he manipulate the tax liability, then he will stop at that point of time, because he will know that this para may be raised during the course of audit. And similarly, it has a preventive effect as well, because looking to that that audit by the tax authority, person is definitely prevented from misconducting any transaction, or have a fear whether the tax officer will pay liability together with interest and penalty. Its general guidelines says that while conducting, it is very important, you have to read this. While conducting the audit, auditors, that is their tax auditors, the tax audit, that or department auditors are advised to keep in view the prevalent trade practice, economic realities, and also the industry and business environment in which the registered person operates. Therefore, auditors should take a balanced and rational approach while conducting the audit. Confidentiality should be maintained in respect of the sensitive and confidential information furnished to an auditor during the course of the audit. It may be a case where one audit commissionerate is conducting an audit of XYZ particular taxpayer. Depending on the industry and trade practice prevailing across various industries, it may not always possible that the same process has been followed across the India for every taxpayer. So reasonableness should also be considered by the tax authorities when they are coming for tax audit. Duration is also given. It is very interesting. It says that whenever you are conducting the audit of a large taxpayer, you need to complete it within 6 to 8 working days. And these 6 to 8 working days are tentative, as well as only for 1 year. So if they are conducting the audit for 5 years together, then it says that you need to complete it within 16 days. Why? Because it says that depending on your experience, since you have already conducted the audit of a one particular year audit, so that is a 25% working days for every additional year that you need. So it is not like that if you are need 6 days for 1 year, then you need 30 days for 5 years. It is not like that, because depending on their experience, their grip over the audit will increase. And large, medium, and small taxpayer category, how they have to define that, we will see later on. But as far as the large taxpayer, generally they need 1 week time, medium taxpayer 4 to 6 days, and small taxpayer 2 to 4 days. But practically, it is not like that. This is just an indicative number. Depending on the complexity and depending on the audit commissioner that is they are conducting the audit, this period will definitely vary. So what is the audit process that audit manual has gone through, defined, that we will see. Audit manual says that first of all, at the commissionerate level, they need to create the audit team, that what are the various audit commissionerate that they will identify the audit team, who will be the superintendent, who will be the subordinates to the proper officer that will conduct the audit. Depending on the risk assessment that we will see later on, they prepare the audit schedule, that what are the area and what are the taxpayers that they want to cater, and accordingly they prepare audit schedule. Then allocation of the taxpayer, depending on the, let's say they have 100 registered taxpayers. For them, that particular one audit commissioner want to audit, they allocate the team to 10 different audit team. Particular person is responsible for conducting 10 taxpayers. Once the audit allotment of the taxpayer is conducted, these audit commissionerate will intimate to the registered person that by issuing a ADT 01, they ask various information. Whenever the information is provided back to the audit commissionerate, they will review the data. First review will be on the desk review. Desk review means they review the data on the desk itself. That is, they review the data online mode, or whenever they ask the physical file, they will review the data principally at their place or at their office itself without going to the client place. Once they go through the desk review, they will see the number of days that they need to allot, and accordingly they will prepare an audit plan. They go there and actually verify the data that has been asked for, and based on their verification, they issue a draft audit report for MCM. MCM is a monitoring committee meeting, and this is very interesting as far as GST audits are concerned. This is a major difference of erstwhile law and GST law. In erstwhile law, these smooth processes are not being seen. Generally, the audit commissionerate that they are auditing at particular region, the information and data and evaluation of that particular audit review para will be restricted to that particular region only. Here, what the auditor need to do, they need to intimate to the monitoring committee meeting that these all are the paras that we have identified by auditing some particular taxpayer. Such audit commissionerate will together compile the data from various states and identify that, look, these all are the vulnerable areas. These are the certain niche areas where there is a revenue leakage possible. It may be a situation where in Gujarat, there are certain audit paras that may not be identified by audit commissionerate that has been identified at Maharashtra level. So Maharashtra level audit commissionerate will pile up the data and share it with the principal commissioner, and they identified certain areas which centrally they allocate to allocation of that para will be shared to the various auditors, and accordingly auditor will have a vast area to look for. They will examine the audit paras and upload the audit and minutes to the MCM, that is monitoring committee meeting. After approval, they will prepare the final audit report and communicate to the taxpayer. I will share this slide so you can go through this audit process. This is more or less same what I have discussed. So how the selection of the registered person will be done? It says that the selection will be done based on the risk evaluation method. So what is the risk evaluation criteria? They have defined various risk evaluation criteria. That is in the subsequent slide. It says that whenever you are selecting any audit client, that is audit taxpayer, you need to provide the reason for selecting that particular taxpayer. And it says that it should be ensured that 20% of the taxpayers to be audited are selected based on the local risk factors after obtaining the approval of the Principal Chief Commissioner. Category of large, medium, and small taxpayer will be decided based on the turnover, available manpower with that particular audit team, and number of the registered person for that particular region. Please note that that category may be different for different audit commissionerate. It may be possible that in rural area, the audit commissionerate is conducting the audit for particular taxpayer that may be called a large taxpayer, but the same ratio will not apply to the greater city of Mumbai. This category will be periodically reviewed and necessary changes will be made. The suppling of the category, whether from large to medium or medium to large, or as the case may be, will be carried out periodically. This is also something new that is heard first time. It says that the accreditation status will be issued to a particular taxpayer based on the track record. If one particular taxpayer is audited by a team and the compliance level is found to be very accurate, then they are provided the accurate accredited status that yes, this particular taxpayer is very compliant enough. So it may possible that that particular registered taxable person may not be audited every cycle, that is being defined by the audit commissionerate. But the procedure for giving the accreditation to that particular taxpayer is not yet decided. It says that whenever the accredited status is given to one particular taxpayer, it will be audited only after the 3 years from the last date of the audit. So that is the added advantage to the compliant taxpayer. So what is the actual audit verification that CBIC audit manual says about? First of all, as I said, desk review will be conducted that based on the data that you have received. They verify the data at the office. They understand the financial and accounting system that the registered taxpayer is following. They understand how the books of entries are being passed, how the ledgers are being affected, and what is the outward liability and inward liability system mechanism, what is the process that registered taxpayer is conducting. Looking to the primary data that is available, they also identified certain vulnerable area that they will focus when they go to the physical verification at the particular premises of the taxpayer. They need latest trial balance sheet, tax audit report, annual financial statement, cost audit reports, and whatnot. They gather all the data, identify the list of the areas that they need to verify, so that time of the taxpayer as well as the time of the audit team will be saved and they can focus on the vulnerable area only. Similarly, the next step they carry out is the revenue risk analysis. Where is the revenue leakage that can be possible? Is there any other income that the taxpayer is not paying the tax on it? Is there any valuation issues or undervaluation of the outward supply is find out? Such kind of risk parameters, revenue leakage parameters has been identified by audit team, and based on that they will conduct a physical verification in subsequent stage. They also go to a trend analysis. They see the data provided by the taxpayer and check that what is the year-on-year basis figure of the sales, figure of the purchase, and similarly what is the year-on-year basis tax that registered taxpayer is paying. Based on trend analysis also, they can identify certain areas which there may be a case of additional tax liability. Similarly, what statutory auditor is doing, they can also conduct an internal control system, whether the internal control system of the particular client, particular taxpayer is strong enough to rely upon. Let's take an example. Input tax credit can only be availed when there is a receipt of the goods. They check the system of internal control system of the taxpayer, whether that internal control system allows to pass claiming of the input tax credit only if there is a goods receipt note, that is called a GRN. Whenever there is a GRN imposed or particular posted in the system, then only the ITC can be claimed. Before that, you cannot claim the ITC. Whether such kind of system is followed by the taxpayer or not, that is to be analyzed. They can also go to a walkthrough, that is, they identify one particular area or one particular invoice, let's say. They pick up the one particular purchase invoice, and from PO to payment, that is from whenever purchase department is raising the PO to the ultimate the payment or payment to the vendor, they identified the system that is followed by the taxpayer and check whether is there any loopholes where the revenue leakage can be possible. To save the time, because the time is limited and they need to cover the lot many taxpayers during their assignment, they follow the ABC analysis and give the weightage only to the high weightage area where there is high possibility of tax evasion. As discussed earlier, they can come to they can do audit on premises as well as the off premises. They can also have the access to the documents which is used by them for cross examination. Let's say if you are giving the stock statement to the bank, because you are having the credit CC account in the bank, and you need to provide debtors as well as the stock statement every month or every quarter to the bank. They will verify the statement also and match whether you have properly recorded the accounts or properly updated the accounts with correct facts and figures. They prepare the working paper. These all working papers are given in detail in this audit manual, that what are the working papers that they need to have. Whenever they find out any irregularities, they inform the taxpayer that this is the area where, as per revenue, you need to improve upon. And they also give the suggestion for the future compliance. What they can see practically. So they need CARO report. We all must be knowing that in CARO we need to report where there is a regularity in the depositing the statutory dues. Whenever there is an irregular GST payment, the statutory auditor will report the same in the CARO. Tax authority will see that CARO report and ask the tax audit and get the information about the taxpayer, whether he is regular in depositing the same or not. Similarly, from the director's report, what tax authority can see? From the director report, they can see whether whenever there is a foreign exchange fluctuation account is there, and wherever there is a payment in the foreign currency, is there any liability of RCM in case of the import of the service? Or in case any other activity that is being carried out by the company during that particular year, whether proper GST implication has been casted for that particular new operation. Based on the statutory auditor's report, it may be possible that the qualification is issued by the auditor. Tax authority is also seeing that qualification to check whether is there any qualification which directly impact the tax evasion or tax leakage. They can also conduct the scrutiny of the P&L. They identified certain other incomes on which the tax is payable but not paid. It is generally seen that as far as the sales are concerned, that is being properly complied, but the taxpayer is escaping the liability as far as the other incomes are concerned. Let's say rental income or scrap sale. Certain income might get escaped from a GST liability. Similarly, they also review the RCM and debit side of the expense account and see whether is there any account name called freight and transportation, and whether you have properly discharged the RCM liability on that particular invoice or that particular expense or not. Similarly, if you have paid the sitting fees to the director, whether you have paid the RCM or not. This kind of analysis from the P&L they can conduct. While reviewing the balance sheet, they can also ask for the fixed assets register and check whether have you disposed of certain fixed assets on which GST liability may be required to pay. From looking to the share capital account, it also knows that what are the related party, whether the company, subsidiary or holding company, and related party transaction as mentioned in GST laws has been properly complied with in case of a transaction with the related party. Certain hints can be also derived as if tax officer gone through the notes to accounts, because in notes to accounts there may be a notes with regards to the stock which is write-off, which requires the ITC reversal under section 17(5). There may be a certain quantitative information like adjustment or shortage or loss. These may be relevant information for the tax authorities. And similarly, we can also, being a GST professional, whenever we are going to our review of our client, and it may be a possible situation that statutory auditor has already issued the audit report, then we can also have such kind of parameters to identify the prospective area when we can give the certain value addition. Looking to the trial balance, they identify the coding system, like 1 number is for assets, 2 number is for liability, 3 is for expense, 4 is for income. Based on that coding system, they can identify which ledgers are relevant for them or which ledgers are not relevant for them. There may be certain unused ledgers, like suppliers account is remain unpaid. So they may question that you have not paid these suppliers within 180 days, so you need to reverse the input tax credit. Post audit reports is also available. Post audit reports may be also useful for them as far as the stock related information are concerned. In rule 30 of CGST rules also, we need to identify certain valuation and 110% of the cost. So whether taxpayer has correctly identified the value, that can be reported, that can be observed, and that can be reviewed from the post audit report. Tax audit report is also useful for them. They ask you the tax audit report and they will see 4 or 5 paras that is relevant from the GST perspective. Clause number 18, you must be knowing that that is for depreciation. Whether whenever there is addition of the fixed assets, either you can claim the depreciation, either you can claim the credit, or you can claim the depreciation. Addition or removal of the fixed assets can be seen from that particular para 18, and proper GST impact has been given to or not, that can be verified. 27 is for itself for GST. You need to provide the breakup. What is the opening credit that is available? What is the reduction in that, and what is the net closing balance that is being matched with your books of account as well as the credit ledger. Section clause 21 also talks about the prior period items and whether the time of supply has been followed in such case. That is also being identified. Clause 38 post audit reports we have already discussed, and clause 40 accounting ratios. As far as the ratios are concerned, they have also categorically identified various GST ratios in audit manual, that we will see that how ratios can be identified by tax authorities, and they can raise the questions based on that. I have given certain examples which by which you can capture that what is the scope of that particular CBIC manual and what they can verify at that particular time. It says that expense debited on with the RCM needs to be paid, but merge on the income side. Generally, RCM is on an inward supply, so it must be on an expense side. But it may be a case when you have a recovery from customer as far as the freight amount is concerned. That is for income side. And similarly, you have an expense or freight that you paid to someone else. That is on the debit side of the P&L. But taxpayer might have passed the JV and have only one ledger. So they audit manual says that you need to see both expense as well as income side, and particularly such kind of intra adjustment of the ledgers. Similarly is the case with the income or vice versa. Sponsorship service may be also grouped under the advertisement expense, so you might not get the idea of the exact sponsorship service that taxpayer has expense out on which he needs to pay tax. but that is covered under the advertisement. So we generally seeing that whenever the tax authorities are coming to our place, they ask the ledger and explanation about the each such kind of ledger. But what is the nature of expense which is passed in terms of advertisement or promotion expense? There may be a case where you have procured the fixed assets, cost incurred to get that fixed asset up to your factory premises, and you have paid the transportation expense. But since it is a capital item transportation expense, you might have capitalized the transportation expense in that particular assets itself. But ideally, our RCM liability would arise on that particular freight portion, even though you have capitalized and not expense out. GST deducted versus income reported, these all are the analysis that they can carry out. Similarly, we can also use, because we have already information what they want to verify, so we can have also look from this perspective and give certain value addition. As I said, they have identified certain ratios. We are quickly going through the ratio analysis that they have identified. I don't know how much, how much time they will provide for analyzing this ratio, or first of all, the deriving this ratio and then questioning that why this ratio is in deviation. But this is very good audit manual prepared in my view, which is whenever, if at all, any tax evasion or any loopholes are that, these definitely will be come across if tax authorities are deriving these ratios. First ratio says that the input tax credit availed divided by the total tax paid. Total tax paid may be ITC or cash. So it says that and these ratios, they will identify this ratio and compare a year-on-year basis. They will see the movement of these ratios, whether these ratios are increasing or decreasing. And by identification of that, they will identify whether you are wrongly utilizing the ITC because the ratio is increasing. Your input tax credit is increasing compared to the total tax payment that you are making. So it may be a case when you are utilizing the ITC wrongly, you are undervaluing the goods on which you need to pay the tax, or remove the goods without payment of the tax, or claiming the ITC on goods which are actually used for exempt supply, and you are supposed to reverse the ITC, but you are not reversing. Second is the case of the inward supply cost divided by the total outward value. Why this ratio is important? They want to identify what is the value addition in fixed assets. So you have procured certain goods at 80 rupees, but you are selling the same at 100 rupees. So what is the value addition that you are giving? And that ratio is also being compared year-on-year basis. And by that, they will identify what is the addition by way of a wage, overhead, depreciation, interest. And they have also mentioned, given the instruction that while calculating the outward supply, you need to consider only taxable value of goods. Third ratio is the capital goods purchase, input tax credit claim on capital goods purchase divided by the addition in the total capital goods. Whenever you are adding any capital assets, the ITC may be eligible subject to 17(5). But similarly, when there is a reduction in input fixed assets, then you need to pay tax. But also you need to consider section 18(6), which says that whenever you are claiming the input tax credit on particular assets, but you are selling that assets, then you need to either pay the tax on the transaction value or reverse the ITC, which is in excess, if you calculate the ITC as per section 18(6), whichever is higher, that amount you need to pay. Whenever the industry which are engaged in the scrap, outward supply of the scrap divided by the total supply, and that if that ratio is coming down, let's say if your scrap quantum compared to the total outward supply is coming down, if tax officer compare year-on-year basis, then it may be possible that you have not prepared the invoice for the scrap sale, or it may be possible that there is a non-generation of the receipt of the scrap from the job work. It may possible that scrap is received in sorted, less received from the job work, so there is no scrap at all. So these all are the ratios which is, in my view, very good analysis, that they can carry out like this also, like value of the zero rated supply divided by the total supply. So industry which are engaged in the export of the goods, what is the quantum of the export turnover? This export turnover will help them to identify whether the refund claim by such particular entity is correct or not. Similarly, at the time of refund calculation, whenever export turnover is to be identified, Rule 89 4C, which says that the valuation of the export, which is not more than 1.5 times of the other industry, that is also to be considered. These all points are to be considered while deriving the export component. It may be a possible that taxpayer may be engaged into non-GST supply. So the ratio between the non-GST supply compared to the total supply, and is there any possibility to reverse ITC under 40 to 43? Because exempt supply and non-GST supply are both different, but it may possible that taxpayer might report exempt supply as non-GST supply. Basically, non-GST supply here means on which the tax is not being paid by the taxpayer. And for the industry which are in service, they have also categorically mentioned two ratios: that total cost of the input received, that is both for the goods and service, divided by the total value of the outward supply. So that is called A. We can see one example that, let's say my total input cost is 80, my outward supply is 160. So my ratio for A is 0.5. Similarly, in case I want to compare this ratio with B. B says that how much credit I have availed and how much total GST I have paid. That is also called 0.5. Now, this both ratio is compared, and whenever there is an increasing trend, it suggests that it is an unaccounted outward supply, or that it is accounted but the valuation is undervalued. And if B is higher than A, it says that it is the wrong availment of the credit. Whenever you put out the actual data in this ratio, and you will identify that what it wants to say. Certain checklist that CPIC manual itself provided. First is for composite dealer. If composite dealer GST audit is conducted by tax authorities, then what are the checklists that they have provided? It says that whether, first of all, composite dealer turnover is a prescribed limit. If the limit is crossed, then he is not eligible to opt for the composition scheme. Second, whether quantum of service that is eligible to composite dealer, that is within that limit also. It may be possible that earlier the composite dealer is a regular dealer and now he is switching over to composite dealer, whether he has reversed the ITC while opting for the composite dealer. Composite dealer is not exempted from payment of the RCM liability. So it says that whether the composite dealer had paid the RCM. Composite dealer is not eligible to collect the tax. So it also says that whether the tax that is being paid must be expense out and should not be recovery from the customer. Similarly, other checks and balances are also provided. I am sharing this slide. You can very well refer at your convenient time. With the limitation of time, I am moving here. What is the trader? As far as the GST audit for the trader, what information that can be sought from such kind of trader? What is the invoicing pattern that is being followed? Whether that trader is trader is complying with the requirement of the invoice, whether the invoice that is being prepared is as per the section 31 criteria itself. Second, time of supply is being adhered to while traders, in case of the outward supply, returns, whether they have filed regularly or not, input tax credit claimed by them. These all are the common points, but in detail, under each section, they have provided in detail explanation that as far as the valuation is concerned, whether the valuation of, let's say, section 15.3, which is called the value addition to one particular transaction value. whether that value is being correctly computed by the trader or not. This is all, these all are mentioned in the CBSE audit manual. This is the draft letter that may be written by the registered person who is not supposed to pay any tax. So this is the draft letter format. This is already provided in the audit manual. You can use that, or you can use this format. This is just for the waiver of the SOCOS notice, because the audit para that has been identified by the tax authority, you have already discharged. So you need to communicate to them via writing this letter together with attachment of the DRC 03. Other records to be verified. This is the long list. I am not going into detail. So this is important. We have discussed that there are certain local risk parameters. Earlier, as far as the service tax audit is concerned, there are certain threshold limit of turnover. Based on the turnover only, they are calculating whether that category of person is covered under audit or not, and what frequency they are being audited. So earlier, the turnover is the only criteria for evaluating and selecting the taxpayer. Unlike this, there are n number of criteria that is being provided in these audit manuals. You can see whether that person has not provided the details that is asked for, he will be selected. If that person is not previously audited or it is newly registered, if that person is already being audited earlier but the time gap is very large, obviously turnover and net profit is the one criteria that is being selected, that is being considered for selecting. Whether taxpayer is incurred any loss or whether taxpayer is have obtained large amount of refund. If there is a change in turnover or net profit ratio from the previous period, expense or turnover ratio is also to be considered. Whether turnover has requested the waiver, or is there any legal dispute is going on. Whether that taxpayer is previously being investigated for evasion of the tax, and the quality of the books account that taxpayer is maintaining. If the taxpayer is multi-state branch, if there is an increase in the ratio of the exempt supply, multiple instances that are coming out for that taxpayer for instances of removal of the goods without e-way bill, or if he is not filing his GST return. There are n number of local tax parameters based on which that taxpayer will be selected for GST audit. So unlike earlier law, as I said, it is not just the turnover. So we would not think from the perspective that my client is not having that much turnover, so it will not be selected. It is not like that. There are n number of criteria. Your client may be falling under these particular criteria, and based on these local risk parameters, that may be selected for audit. So we have done away with the three part. We are moving to the last part, that is what we can offer being a GST professional to our client, and how we have to review the books of account. And whenever we are at the audit place, how can we give the value addition? So this is, I'm not using the word GST audit because GST audit is done away with, but we can replace the word with GST review. Before we start our GST review, we need to see what is the constitution of the client, whether he is a proprietor, partnership, or a company. Based on that, we are asking the various records to be verified by us. First of all, we have to understand the nature of the business that client is into and walk through whether that particular client is, how the procurement cycle is going, how the dispatch and marketing is going on in that particular. We have to sit with the proper person in the business premises. Based on that, we will get some hint that what information that we can seek. What are the various type of registration? Review the registration certificate and we get the idea that the client is having how many GST registration number and what are the additional place of business that client is having. What is the activity going on at additional place of business? Whether it is just a depot, warehouse, or certain additional outward supplies also. Based on the discussion, we can also analyze whether the client is having any other operation other than the state in which he is registered. If so, whether he is supposed to obtain GST registration at another place. We generally, when the small client is there, they are maintaining the data in the tally. Whenever the client size is bigger, he must be maintaining the data in ERP or SAP. We procure that data, and first point that our team need to come in. Now our team means team of the chartered accountant and not the tax authority. We are discussing from the perspective of the chartered accountant. Our team will be guided with the data that is being asked for, and that data first of all need to be checked with the financial statement. It may be possible that the data that we are working on may not be populated enough to cross tally with the financial statement, and there are one or two data which is missing, but we might not know. So first step, whatever data we are working on, that must be matched with the financial statement. We can also ask the stock register lying at the different location for the tracking the movement of the goods, whether the stocks are actually received or particular goods are receiving. Based on that, the client is claiming the credit. Observation and review of the other auditor as well. If we are not the statutory auditor and internal audit is going on for that particular client, we can ask the report and see the deviation mentioned by them. We can also see whether if the login credential is available, then we can check on GST portal itself whether any notices has been issued to that particular client and reason for the same. It may be possible that the notices may not be received on online. Then we need to discuss with the client whether have you received any notice in the offline or any e-waybill notices that is being issued to them. What are the disputed present litigation and status thereof? We can also check the previous GSTR 9 and 9C observation as far as that previous 9 and 9C is to be audited by chartered accountant. So it may possible that the CA might have reported certain qualification or observation. We can check whether the same has been adhered to in this particular year or not. And depending on the industry, let's say you are doing the audit of the construction industry. So what are the areas what are the issues that is being reported as far as that industry is involved? We might discuss with a client that particular advance ruling or court judgment that is directly applicable that particular client. Is register specific. Let's say if I want to see from the perspective of outward supply, what analysis I can do? First of all, I will check whether all the customers must be having the unique GST number. I can do this exercise in the Excel. I can have one side customer name and one side GST number. I can check whether that total year outward supply, if that customer is having GST number starting with 27, let's say if it is registered in the state of Maharashtra, then he must have charged CGST and SGST only. And other than 27 GST number starting with 27, he must have charged IGST only. We can have the list of the items, list of the goods in which the client is engaged into. Check whether that particular HSN is correctly classified based on the product classification, and GST rate, if any, changes if any, effect thereof has been provided with the effective date as per the notification. Check the time of supply. We can also check the liability side. If the advance is received from the customer, whether tax has been duly charged as per the time of supply provision or not. We can also have all the data in Excel and analyze whether is there any series break in the invoices raised, is there any series break in the delivery challenge that is being issued, and if there is a series break, the reason for the same. It may be possible that the invoice might be cancelled, but reason for the same must be discussed with client for better understanding. We can also check audit report. It's in audit report, related parties are also being mentioned. Transaction with such related parties need to be discussed because their valuation is impacted. Though we have a proviso to Rule 28, which says that a transaction with the related party, and if the recipient is eligible for the claim for the claiming of the credit, then valuation would not be a question as far as the rule proviso to Rule 28 is concerned. But whenever there is a recipient is not eligible for the credit, whether the market price has been charged for in particular that related party transaction or not, that is to be seen. We can also verify ratios that has been already provided in the CBIC manual, as well as we can also verify the data month on a month basis, and based on the trend we can check whether is there any proper discharge of the tax liability, or is there any variation thereof. As far as the inward side is concerned, inward side ITC is the main concern. So we need to check GSTR 2A reconciliation is obvious. That is the first point for starting. Similarly, we need to, everybody is verifying the ITC that is available in books of account and ITC that is available in GSTR 3B. That is not a big concern. The only concern here is that we can review GSTR 2A to B, and based on that we can identify whether the place of supply in that GSTR 2A to B not belong to the registered person state, then that credit would not be available in GSTR in table 8A of GSTR 9. The government authority is considering table 8A of GSTR 9 only for matching of matching of ITC with GSTR 3B. So if that credit is not eligible and not available in table 8A of GSTR 9, then you need to consider it as a ineligible. Similarly, GSTR 2A also gives me the list of the transaction on which I need to pay tax being a recipient of the service. I can check whether client has properly discharged the tax liabilities on the portion of all the RCM transactions that is being auto-populated in GSTR 2A. We can also scrutinize the various GST ledgers for RCM liability as well as for block credit, like sales promotion expense, sample expense. These all are the expenses, stock write-off. These all are the expenses on which the ITC reversal may be affected. ITC reversal may be affected. So we need to scrutinize that particular point of as well. And similarly, whenever there is an exempt supply, we need to assure whether the client has properly discharged, properly reversed the ITC as per Rule 42 and 43. This area is also vulnerable area as far as the debit note and credit notes are concerned. Scope of credit note, particularly debit note, may not be that much concern for us, but as far as the credit notes are concerned, we need to assure whether the credit note issued by the client is as per section 34 and whether that is also within the time limit. Whenever there is a transaction without the impact of the quantity, we need to ask the reason for the same and validity of the same, because it may possible that there are certain credit note under GST which may not be permissible, particularly port supply discount, because the credit note for the port supply discount must be adhered to as per section 15 of the CGST Act. If you have not fulfilled the condition as mentioned in section 15, then you cannot have GST credit note, but you need to raise the financial credit note. And last, stock analysis. We can have the reconciliation of the stocks. That reconciliation of stock is already available with the client because they need to provide that same details to the statutory auditors. Based on the stock identification, because there may be certain quantities which are given freely and outward side for that particular quantity should be 0. So we should ask whether the client has reversed the ITC for that particular free supply. And similarly, as far as the stock write-off is concerned, that is also attracted section 17(5). So with this, I end my session here. I open the session. I request Jitendra Bhai to have question answer from the audience if any. Thank you.
Yes, sir. Thank you, Hiren Bhai,
Thank you, sir.
for such a wonderful session. One question from Punit Gupta ji.
हाँ जी सर.
whether ADT2 has to be issued before or after issuance of DRC01A or DRC01?
Sir, ADT01 has to be issued after. ADT02 is the intimation of the audit paras. So it may be a possible that during the court, the audit is ongoing, but you are settling the case, settling the para for one particular audit para. So you can have DRC01 for that particular audit para. Rest is going on. So after conclusion of the GST audit, only the ADT02 will be issued.
Any other participant want to ask? They should raise their hand. Another question from CA Suchita Angane. What if the audit does not get completed within 3 months of officer visit?
Suchita, as I said, though this provision is mentioned that within 3 months the audit should be completed, but if it is not completed, it is not mentioned anywhere that it is deemed to be concluded. So you cannot say that after 3 months you cannot issue any audit report notice, or you cannot issue any SCN. Ultimately, if at all, if audit para is there, then that audit team will issue the audit para to the audit commissionerate, and audit commissionerate will initiate the proceeding under section 73 and 74. So practically that even if that within 3 months the audit is not concluded, taxpayer is not having any option to raise an issue and says that now the audit is time passed.
Any other participant? You can ask directly also, Swamit.
Yeah, can you hear me?
Yes.
Yeah, I'm asking that if the department has so moto cancel the GST registration certificate because the company was not filing a GST return, still they can go for the best assessment judgment, because in one of the law that we have given, if the client is unable to find the return in
Correct.
timely manner, so they can proceed with the assessment. Is it possible?
Yes, possible, but in that case they will ask you to file GST returns, provided your GST registration is not cancelled. If it is cancelled, then you need then they will issue a so cause notice considering as you are unregistered, and ultimately you need to pay tax. And for that only you can also go into appeal if in case you want to defend. If you go to a login page, you can also have GST without login, without GST credential also you can have access to the GST portal, and that is for this particular reason only.
Okay. Okay. Yeah. Thank you very much. Yeah.
Thank you.
Sir, can you, sir, please throw some light on the difference between interest under 51 and 53 to 18% and 20%, which department is charging? Many a time suo moto, SSC is reversing their ITC credit wrongly availed by him and came to know after 2-3 months, and they are reversing it suo moto. When whether then 53 will apply or 51 will apply in that case?
Sir, can I open it 50, 51 and 53 and then discuss?
Yeah, sure, sir.
Just hold on. Sir, first of all, 53 is yet not effective. It is yet not notified. I mean, it is under the Finance Act, but yet effective date of levy of section 53 is yet not issued. As far as 51 is concerned, that is 18%. But one good call is that for 53, that you must have availed and utilized the ITC. Then only interest would be applicable. It may be a case that I might have availed the ITC but not utilized. So on that, there is no interest implication. But as of now, section 53 is yet not effective. But we will see what is the interplay once the 53 is effective. But in my view, earlier it was said that you need to claim the credit in your GSTR 2, and then only in excess availment there is an interest. But since GSTR 2 and 3 was not in place, that section becomes redundant. So that for that only this provision is effective, but yet not notified. From effective date of this provision is yet not notified. And to my opinion, still there is a ITC reversal voluntary. Interest at the rate 18% is only applicable.
Thank you. Thank you, sir. Thank you very much.
Thank you.
Other person, any other queries? I think all the queries is answered by you. I request Aditya Maheshwari. Aditya? I request Aditya Maheshwari ji to give vote of thanks to Hiren Bhai.
Good evening, everyone. I see Aditya Maheshwari on behalf of Andheri Oshiwara Study Circle propose a very hearty vote of thanks to Hiren Pathak, who had very deep shown his expertise on the topic and given insight on what we should check, and also an auditor also. So what we should take care while doing audit of the companies also. So not only from the officer side, but also from the auditor, internal auditor side also. So that's a great insight, and people were glued to the screens, and there were nice participation by the members also. So thank the members also for their presence. Yeah. So I request everyone to please join me to propose a very hearty vote of thanks to Hiren Pathak.
Thank you, sir.
Thank you.
Thank you.
Thank you, Aditya ji. Thank you, Hiren Bhai.
Thank you.
There are announcements before ending session. Member, please note that we have our next physical meeting on the 15th May 2022 at Raheja Classic Club on the topic significant amendments in Schedule 3 and CARO 2022. And speakers of the topics are CA Srinivas Joshi ji and CA Yagnesh Desai ji. Further, the WRC chairman CA Murtuja Kachwala ji as a chief guest, and WRC secretary Shweta Jain ji and treasurer CA Piyush Chandak ji from Nasik are the guest of honor for that event. They given their consent for attending the program. So I request all the members to reserve the date for the attending the event. Thank you. Thank you, Hiren Bhai.
Thank you.
Once
Thank you,
again,
sir.